Investors eye Fed rate cut, earnings as key to sustaining market rally by David Randall. New York, Reuters. After a stellar start to the year for stocks, investors are on guard for potential bumps in the second quarter as they gauge whether the Federal Reserve delivers on an expected interest rate cut by June and turn their focus on the health of upcoming earnings. The S&P 500 ended the first quarter with a gain of more than 10%, its largest first-quarter advance since the nearly 13.1% jump in the first quarter of 2019. While so-called Magnificent Seven stocks such as chipmaker Nvidia and Facebook parent Meta Platforms provided the bulk of the gains for the quarter, economically sensitive sectors such as energy and industrials have rallied over the past 6 weeks. Whether the rally continues through June will likely depend on the Fed, which has not yet signaled that inflation has come down enough to justify a rate cut. Markets began January with 6 to 7 cuts priced in over the course of 2024, but are now anticipating 3 cuts after signs of resiliency in the U.S. economy increased investor confidence in a so-called soft landing. The market and the Fed are finally aligned on expectations, but that puts even more pressure on every economic report that comes out because it doesn't take a lot to make everyone run the same way, said Joe Kalish, chief global macro strategist at Ned Davis Research. We're expecting more volatility if we don't see more progress on the inflation front. Futures markets are now implying a 61% chance of a 25 basis point cut rate at the Fed's policy meeting that concludes June 12th. Bringing benchmark rates to a range of 5 to 5.25%. According to CME's FedWatch tool, investors recalibrate 2024 rate cut bets. Markets pricing in first Fed rate cut in June. Forecast on February 23, 2024. Forecast on February 23, 2024. Forecast on February 2, 2024. Forecast on February 2, 2024. Forecast on December 14, 2023. Forecast on December 14, 2023. Continued growth in the U.S. economy will likely continue the recent broadening of the market rally into cyclical sectors and small-cap stocks as investors search for more attractive valuations, said Jason Alonso, a portfolio manager on Harbor Capital's multi-asset strategies team. The Russell 2000 index of small-cap stocks ended the first quarter with a 4.8% gain, while the S&P 500 industrials sector rose nearly 11% over the same time. Right now, the only thing the market cares about is whether the Fed remains in control even if the economy reaccelerates, Alonso said. If that idea was upset somewhat and the Fed had to imply that rate hikes were back on the table, that would be a shock to investors and cause a real issue for all assets. Economic readings next week, including ISM manufacturing data, ISM services, and the closely watched non-farm payrolls report, which economists polled by Reuters expect to show a growth of 198,000 jobs in March.